Hi everyone, and my apologies for the late arrival. Have been trying to get into the room without success as some sort of inner sanctum password changes have been going on, and technology is not my thing, as you probably all are well aware. Thank you, Marlon, for letting me in the room, and welcome to everyone who has successfully managed to get in so far. All right, let's hope Ash can find his way in as well as we go straight into what we normally do, and that is have a look at the pound versus the US dollar and see if we can make some money here. Tell you what, it's been a very, very boring week from my perspective in terms of trading. Not that I've been in front of the charts too much, to be honest, but when I have, it doesn't meet my eye. All right, pound today. Let's look at the range, shall we? From the 0200 candle, which is Tokyo Open, to current candle, which is just prior to London Open, gives us a range of, that's the high, and that's the low. So let's fiddle with those. There's your low. And there's your high. I'll just take that away so I can see the top of that candle. There we go. So the high there is 10861. 10861. So that's going to be the stop loss if we actually take this short. But we'll work it out first. 10861. And the low of the range is the low of that bar right there. And that is 1.0762. 1.0762. So that's pretty easy. 99 pips of stop loss. So we're looking for 49.5 to find the middle. And the middle is going to be 49.5 will be 108.10.5. Do we need to be that accurate? Well, it's entirely up to you if you want to be that accurate. 108. That doesn't look right. Oh yeah, I've just moved to the bottom of the range, haven't I? Sorry, my error. 108.10.5, which is pretty much bang on where we are. So no trade. I won't be taking that position. If we're very, very close to the point of entry, which is that level right there, I won't be taking any trades. Now, also, just to add to that, I have added another filter to this, and it is if this candle had closed just below the line, meaning we needed to buy the market, then we wouldn't have taken that trade either, because we're going in this. We don't want to go in the same direction as the candle. So had it closed up here, no problem. We could have gone short. But if it's going in the same direction, in other words, if we're underneath the center line and looking to go long, we don't want a bull candle. If we're above the center line and looking to go short, we don't want a bear candle. So we're trying to go in the opposite direction, right? That's the whole idea. But no trade there today. We're too close to the center line. So that is that. Now, how did this perform throughout the week? I have not been in front of the charts at all, guys, so I couldn't tell you. Let's have a quick squeeze. There's yesterday's range from there to there. So the bottom's here, the top's bang on the daily pivot. And let me see what that was. Daily pivot was 107.40, and the low of the range was the low of that bar, 106.32, so 108 pips. So we're looking at 54 above there, which would make it 106.86. 106.86, which is there. High, like I said, there, and low there. So 9 o'clock bar, you were well and truly away from it. So that's good. You would have gone long. So you buy here, got taken into the trade, got no idea how this candle formed. So I have no idea whether this was a TP1 or indeed, it wouldn't have been 2.5, I'm pretty sure. 54, you'd need 108 plus 27, 135 pips, which is 108.20. Oh, you may well have got your 2.5. Anyone trade that? I'd like to know. I can't break that down into minutes at the moment, or maybe I can. If I put a line on it, let's go with 5 minutes, see what happened. There it is. So no, that would actually have been a loser by the look of it. If that's the line, or is it the right line? That's the 1 o'clock bar. Oh no, went up before it went down. So it would have been a winner. Wow, okay, cool. I didn't see that bit. So it went straight up, then came back and took out, well, the stop loss would have moved to there. Again, that's after you've taken your TP1. Again, I don't know exactly how that candle formed. So if it was, and it looks like it was a fairly big eruption, had it come back and hit the center line after going through it, maybe it didn't. If anyone traded that, they might let me know, but I certainly didn't. But it looks like it hit target from this chart anyway. So that's interesting. That was yesterday, day before, which was Tuesday's. And we're looking at that candle there. And that candle there. If anybody doesn't know what I'm doing, just yell out and I'll explain it. Top of the range is here. Bottom of the range is here. Pretty much where that one is. So high of the range is 108.38. Low of the range is 106.90. So you've got 148 pips. So we're looking at 74 pips, which would be 107.64. 107.64, which is there. And at the time, you would have been bang on the entry, so no trade there. You wouldn't have taken it, you would have got taken in, you would have got TP1, so stops to entry, and you wouldn't have got 2.5, you would have been taken out at entry. So hang on 2 secs, Ash is trying to get in. And I'll send you, Marlon, can you send Ash a link, please? That'd be great. Thank you. He's having the same problems that I had, obviously. So break even that one. And on Monday, that one, 9 o'clock is that one. Big range. Can't remember what happened. Placed this trade, didn't I? Expired for me. I don't know what happened after that. So there's the bottom of the range. There's the top of the range. We had all sorts of trouble working that out, didn't we? 103.17 to 107.64. So 103 is 347. Let's call it 346. So 173 pips from there would be 104.90. How come it's easier today? 104.90. Don't look right, does it? I got it wrong, didn't I? That's why it was so easy. 103.17 to 108 is 495. Don't know what I said before. So I'm looking for 409, 248. Be 10565, which is there. Okay, at the time, price was up here, so we're going short from here. and you would have had to wait till yesterday to get in the trade. So no trade there on Monday. The link to get in, Marlon, sorry, same link you sent me, basically, if you don't mind. Okay, so we've got a no entry, break even, potential winner. Nobody's told me whether that's a winner or not yet, so I really don't know. It looks as though it was. And today, no trade. That's probably as best as I could have done throughout the week had I been in front of the charts, but not the case. All right, so let's move on. I said it was boring, really boring week for me. So let's take a look and see why. Firstly, the weekly game changer bars. There were only 3 or 4 from memory. Let's have a quick squiz at those. They were Aussie CAD. Aussie CAD suggesting that we go short this bar here. Well, you could have gone short. You would have had to have taken profit to be now at break even. You bang on that entry level. So it's kind of a topsy-turvy situation that we've had throughout the week. That's the day. Sorry, that's the weekly chart, of course. There's the daily. So the week began here, and really not a lot's happened since, as you can see. We've been down, we've been up, we've had a low test bar, a high test bar, a doji, or a spinning top. Yeah, that's the kind of week it's been. Sweet quarter pound US dollar trade yesterday, but broke even due to the damn doji bar. How did you get in? Yes, did I say yesterday? That one. So they didn't reach TP2, obviously. Okay. Yep. So that must have fiddled around here at entry. So break even all week. Well, look at nothing doing. That's okay. Well, and that's exactly what I said. The market is absolutely not to my eye this week, and I haven't taken a trade since Monday, which, as I said, I got run over by that big move and ambushed, completely ambushed. Didn't see it coming and didn't see it going either. It just happened. So I'm behind for the week, 0.5%, and I'm just not really sure I'm going to pick it up, to be fair. Let me show you what I have done. I've placed an order short on Aussie yen. Now, Aussie yen, very, very interesting, because we said on Monday that the Bank of Japan had intervened last Friday, and so we got that bar there. And my concern, well, not really concerned, but I was looking for this to break and retest this trade line so I could go short. And I have placed a short order underneath yesterday's bar. But the concern for me was, and it's often the case, when the Bank of Japan intervene in the currency market, and if you don't know what I mean by that, the Bank of Japan purchased a lot of yen with US dollars. And that's why you would see the market move pretty crazily at that time, as this bar would indicate. It was next Thursday into Friday. And when they've done that in the past, it's been very much a case of the reaction that we saw, and you saw this on all yen pairs. But then the market just goes into mute, into nothingness. And that's exactly what we saw for the next 2 or 3 days. And yesterday, as is often the case, the market then rejects the Bank of Japan's intervention and goes back to where it was going in the first place. That's why it's interesting that this setup is suggesting that I go with the reaction, which was this, and trade Aussie yen short. Now, because I have a few things going on here, not least of which I've got, it's not really a very identifiable range, if you like, but there is a range in here. And 1 break, 2 breaks, false, false, 3 breaks, potentially false. So we've come back inside that range. And now we've got that retest bar that I was looking for. a bloody big one, I've got to say. Not really happy with that as a trading commodity or a trading bar, but it's there. So the setup's there, and my 3 amigos are sitting there as well. So when I see that, and I also see the potential for this on the weekly chart to be a slingshot trade short with that, and that, if that indeed finishes as it is, I would look to trade that weekly bar short anyway, come Monday. We shall see. But in the meantime, I am taking a 0.5% risk trading that bar. If you want to follow it, the entry level is at 92.11. And the stop loss is 196 pips. My first take profit is a very meager 76 pips, but I think that's the danger zone. And what I mean by that is you're trading through that level there is probably not a good idea without putting something in the bank. Swee's going to look for the CB US news. I'm looking to long due to seasonal correlation with the US equity index. Yeah, look, I think, Swee, that's absolutely acceptable. If on the daily chart, in particular this bar, nothing happens tonight, this bar looks as it is, then you could absolutely switch allegiance to here, because you've then got a double cross of the monthly pivot. The issue I would have with going long here is the weekly pivot untested, dead ahead and dropping. So that makes it frightful to trade long into that. For me anyway, that's just me. If you've got a reason to trade that long, then trade it long. And you can see the bar, and the bar for people who like to trade bull bars long is compelling. Absolutely, is coming off this trade line, or trend line, if you like. So it's rejected that level. It's rejected here before and before and before. So absolutely, why wouldn't you want to trade this long? Monthly pivot stepping up also near the 200 EMA. Yeah, that's 200 EMA is a strong indicator. There's no question about that. And when the market has been away from it for a long time, it comes to it just the same as if it were a monthly pivot or a very strong trade line or trend line, as this one is. Of course, you're going to expect a bounce. The question is, where does that bounce take you? And I have an issue with that weekly pivot. That said, if you've got a break of it and a retest of it, different story entirely. Or on a 4-hour chart or something of that nature, you got an entry that allowed you to take profit before the weekly pivot. Now you're talking. Now I get it. I think what we're, between yourself and myself, we're saying is it's anything but a sure thing. And with that, I humbly agree. And I think it's very much the case with the yen, because of the Bank of Japan's intervention, that it's thrown a spanner in the works, obviously. And the market, like I said at the time, is very much a case of, okay, we see it, we get that they've intervened. So what? How many billion did they put in? Guess what? They wasted their time. And, I hear that and then see that quite often. We'll see. As I say, no fait accompli. We had 20. Actually, I didn't finish going through those, did I? We only got the first one on the weekly chart. And nothing happening. Second one, EuroCAD. EuroCAD suggesting that we go short also. Did that for a short period of time. And again, this is the thing. And wow, this market is something else, isn't it, really? I'll take you back to last week, where I traded pound yen short, got first take profit and moved my stops to entry, safe. That's the way I do things. And the market with this bar went whoosh. Look what I missed out on. OMG. Missed out on all of that because I moved my stops to entry after TP1. My accountant would tremble in his boots if I said I lost that much money. And effectively I did, I suppose. Didn't get it in my pocket. I was also short Kiwi yen, and exactly the same principle. Or did I just, can't remember exactly how I dealt with this, but it would have been same thing, TP1, stops to entry, and the spreads here would have taken me out there, as I recall, before all this happened. Man, did I lose some money on the table last week. Oh, it doesn't end there. Doesn't end there. The NASDAQ. I got short the NASDAQ here, trading this little bar here. And same thing. Came back, took the stop loss. All winners, all trades were winners, but they could have been absolutely massive. Now, translate that into, where were we? Euro CAD. And if you didn't do that with Euro CAD during the week, guess what? You're in a whole pile of dung at the moment. So that's how fickle the market can be. And managing trades is the art. It really is the art. I mean, I consider myself to be a pretty good analyst or chart reader. But as far as, being an ace trader is concerned, I don't put myself in that category, because I find it very, very difficult to manage positions once I'm in them when the market is like this. And like you've just seen, I've left a lot of money on the table last week. Does it make me feel bilious? Kind of. Yeah, don't like it. But it is what it is. The market's the market. And you're either a gung-ho adventurer and taking high risk, and in those instances getting high rewards, but that doesn't happen often. And that's what you need to take away. If it happens, it happens, and you deal with it. But it doesn't happen that often that you get those runaways. So that's very much a case of trying to find a balance. And we're always trying to find a balance. I'm certainly always trying to find a balance between that safety factor and getting those high rewards. It's not an easy task. Right, Euro CAD, we've just dealt with that one. The third of the four was pound CAD, and pound CAD on the weekly chart was suggesting that we go short. Terrible candle in a terrible place, but you would have got a little bit of money out of it if you were clever enough to take profit. And this all happened very quickly, of course, on Monday, as I said. Trying to make money out of that. And again, with that Euro Aussie trade, had I set a TP1, I'll show you that one, entered the market here, and pardon me, my usual approach is take a TP1 at a support level, right? Which is probably right there with all these closes, support or resistance, support through here. And guess what would have happened had I not done what I don't normally do, which is I just took a straight out trade, no TP1s. Target was just above the monthly pivot, and bang, look what happened. Unbelievable, but that's what happens. So pound CAD, very, very difficult to catch, but you would have got some profit had you set a target for TP1. You might have made something out of it. At this moment, is the pound my favorite currency to trade? Not on your life. It is all over the shop and very, very difficult to catch. I'd like to hear what Ashes is going to tell us very shortly about that, and what it's, well, you hear all these things about the economy being in a horrible position, and they've just changed government, all those things going on. It's very, very difficult. And trying to trade this at the moment, the pound is absolutely off the charts. Very, very difficult. Suggested we go short. Same story. If you got the spike, happy days, but you're now probably out of that trade, dependent on where you put your stop loss, I suppose. If you trail it down to break even, then you made a little bit of money. But really difficult to catch these this week. Very, very hard. And as I say, the only order that I've got in the market right now is the Aussie versus the yen. What else is there to discuss with you? We've been, okay, the indices. Now, here was a good one. On Monday, I suggested that we were at the bottom of this range, and it would be ideal to take a long position on oil if you could find a way I couldn't find a way in there, not that I was in front of the charts, but daily chart wasn't offering anything. The 4-hourly chart, on the other hand, offered exactly what you're looking for. So back into the range, retested the bottom of the range, buying. Nice. Next move, I think I'd be favoring daily pivot test, long. There's already a slingshot set up there that I can see on oil. And those of you who know the slingshot will know this setup. But it's just a tad off the trade line. Actually, don't mind this. Absolutely, if it does test the daily pivot, that little scenario there is tradable most often. Now, it's dangerous, super dangerous. Why? Because you're trading straight into the support level and you've got a resistance level. So I'm going to consider this shot over the bow on oil and look for an entry down here somewhere. Play the double bottom, look for a higher low and take it from there. If it comes back to this trade line, maybe breaks it and retests it, having taken that high out, then you've got to trade. But at the moment, it's a waiting game. Daily pivot test, higher low, does look very interesting to me. All of these indices are the same. They've come off the bottom, as you might expect, at a support level. This is the Aussie 200. And clearly at a support level, not a sell zone, definitely a buy zone. I don't trade single candle reversals, of course. CAD yen in correlation, yeah, sure, I'll do that. So double bottom, higher low, gets me interested. Does it get me into the market? Maybe. We'll see what that looks like when the time comes, but very clearly a double bottom, and I'd be more than happy to take that if we can find an entry. That is the Aussie 200. Dollar index, also interesting. Of course, we've spoken about this level at length and found that it was the only level on the chart that was even remotely like resistance. And of course, it has caused the market a little bit of resistance, as we expect. That's the monthly chart I'm looking at. The weekly showing you how last week it closed bang on that level, absolutely bang on it. And thus far this week, we've got above it. We've consolidated a little bit, we've come back underneath it, and we're retesting it. That is telling me that we need to take particular notice at this point, because that looks very much like a false break to me of this 113.19. Let's call it 113, shall we? So tomorrow morning, if that candle looks like that, I'd be very interested in trading a small risk short. You don't have to jump in and put lots of money on this, because if it does reverse, you're going to have lots and lots of opportunities to get into that as it goes short. You can trade the dollar index on MT4, so that's worthy of your attention, but it's also worthy to have a look at everything against the dollar, including gold, oil, Euro, CAD, Aussie, Kiwi, take your pick. Not the pound. Not the pound. I'm not trading the pound long against the dollar at the moment, that's for sure. Anyway, that's a different story altogether. So the dollar index is suggesting to me that tomorrow morning, if this doesn't take out the high or eat well and truly into that bear bar, then this could well be a trade tomorrow. It would be a game changer bar plus, but a game changer bar plus in this position makes absolutely no sense to me, because it is not with the big boss. The big boss, of course, is the dominant chart pattern. Have we got one here? Look, I think we can agree that we're in a strong uptrend, right? So to go against that is not exactly what I want to do with just a game changer or a game changer plus bar. Got to have a reason other than that, and the reason could well be that the false break of this trade line, of this horizontal level, is exactly what the doctor ordered. So I'll be looking for that. Same as the Aussie 200 is the S&P 500. Of course, we've hit that strong support level that we pointed out a few weeks ago, and we've currently got a potential double bottom situation here. Today's candle, this week's candle, will probably tell the story. We had a big, like everything else again, correction yesterday with this game changer bar. Interesting to see if we can take out that low. If it doesn't, then a higher low would make sense to put, again, a small trade into the market. NASDAQ, exactly the same. I don't need to repeat that. The one I find more interesting than others is silver. Ash was talking about this on Monday, and I've looked at the charts this morning and noticed that this is very, very similar in nature. This chart is very similar in nature to the sentiment cycle. Now, those of you who don't know what the sentiment cycle is, it's very, very easy to Google. And I'll just give you a quick look at it. If I can drag it across. There we go. There's the sentiment cycle. That didn't work, did it? Okay, so I'm considering that this area here is this area here. Then we've had a little bit of a break, which kind of equates to this area here. And then we've had this happen, which equates to this area here. Then we've come back, probably a little bit higher than I might have anticipated, but maybe it's just retested that level. Then we've gone back down again. So we're down here now. And we've got this double top scenario here, which is here. And now we're coming into this area. So expect a bit of a rally, but maybe only to this level, which would coincide with the trend line. That makes sense. Then we're going to fiddle around, put another couple of higher lows in before we come back and test this area. Then it falls away. Now we're another year older by now, right? But keep watching it. You know, these days go by quicker than you think. So just keep your eye on that. And the point, of course, that you're looking to trade this is at all these bottoms. Just slowly build a position. But you want to be make sure you take profit at that level, that one right there. And then here's where you want to climb into it, right here. That's the one. But you've got a long way to go yet, if I'm reading this correctly. And if I am reading this correctly, we're just about here at the moment. So interesting. That is silver. That's why I'm interested in more than anything else. And of course, gold, like everything else yesterday, put on a bit of a rally. Is it a short covering rally? Question mark, question mark. What I do see for gold, you know, apart from the things that I pointed out in the past, which of course is that big double top on the weekly chart, and the break now of that neckline, big double top neckline broken, retested. It hasn't retested on the weekly chart, but it has on the daily chart. That retest there, which I traded, if you'll recall, and didn't make any money out of that trade either. But I'm of the opinion that we're probably going back to here. And it's at that point I'll start looking for shorts again to go along with the bigger picture channel and, of course, the break and retest of that neckline. So a couple of things to look at there on gold. I think maybe we're going to get a little bit more out of this rally. Does look a bit like a double cross of the weekly pivot, so it may even be a trade there tomorrow if you're willing to take it. And if you're a gold fan, there would certainly be worse trades to take than entering above there, providing this candle closes as is and not up here somewhere, and putting a stop loss underneath. That would make sense, but there's not a lot of profit there, in my humble opinion, because if I'm right, then gold continues to fall. Yes, it'll rally, it'll go all over the place, but essentially it's trending and it's following the market structure. So I'm more than happy with that. So keep your eyes peeled on that one. And that's pretty much where I'm at. as far as interest in the market's concerned. So, Swee, let's have a look at CAD yen. And Paul P, do I think pound US dollar would achieve parity much like the euro? Wow, it's a big call, Paul, but I'll give you my opinion after we go through CAD yen. The problem I have with that is the US dollar has to slow down, right? It's just got to slow down at some stage. When? Good question. I don't know, but there is a big top coming up on the US dollar. We'll have a look at that in a minute, but let's go for CAD yen first. So CAD yen, what's Swee asking for a trade at CAD yen in correlation with oil? Okay, so what Swee's saying is oil, as I've just said before, looks like it wants to go back up to the top of this channel, which makes perfect sense if it is going to follow the market structure. So if that were the case, the likelihood is it will probably favor CAD long as well, given that the Canadian oil scenario is very much, well, the Canadian dollar is very much influenced by the price of oil, not dependent on it, but sometimes, if not more often than not, influenced by it. So can we look at CAD yen in the same vein as we can oil? Now, as I said before, CAD, I say it all the time, I think CAD's probably my favorite currency long term. And the yen is all over the shop, both short and long term. And the intervention last week by the Bank of Japan makes this extremely difficult, because if the market does, as it often tends to do, ignore what the Bank of Japan have done, in other words, said, oh, what's that? It's like a slap across the face. That's not enough money. It's not going to change the market. It did for a bit, but hey, we think your currency is rubbish, so we're going to sell it. And that's generally what happens. And we're right now on that decision point, in my humble opinion, where we just don't know whether the market is going, not enough money, or is the yen actually going to claw its way out? It's a tough answer. It certainly is a tough answer. And, you know, I haven't got a crystal ball on that one, I've got to say. All I can do is follow what the market's telling me, or what price is telling me. And right now, price is not telling me anything at all, except that it really doesn't know what way to go. If it doesn't, then I don't either. So going back to Swee's question, will the price of oil, if oil does rally, send this one higher as well? Could 100% absolutely do that. Could 100% do it. At the moment, I want to go short, but where's my reward? You know, my risk has got to be enter there, stop loss there, 170 odd pips. And I'm going, 40 before I get into a support situation. So, really, really tough to trade. Yeah, 100%. Sweet. I think you're spot on. It's got to get above here and retest it before I'd be interested. The other way to look at it, of course, is, as I always do, I'm looking to trade long at support. Okay, we're at support, but here's a better scenario. And I'll just grab my pen. So if price were to break down here, maybe find this support level, bounce off that, then come back above both lots of support. It's going to run out of time because the month ends, right? The month ends tomorrow. Then came back and retested that confluence area. Now you're talking. Now I think you've got to trade to the long side. Or, as Swee says, let that happen and that happen. Then you can either bravely trade it from there long, or a little bit more cow corners, trade it from there long. And that would make sense to me. At the moment, I want to trade it short, but I can't, because it just doesn't make sense from a reward to risk point of view. 1016 is the daily support level. Okay, let me have a look at that. So Ash is trying to get into the room. Give me 2 seconds and I'll post a link to him. There it is there. If I can copy that and put it into Ash's chat, we should be cool. There we go. Okay, happy days. Righto, so can it, will it? Can, yep, will, no, don't know. 101.60, which is pretty much here, right? Where'd that come from? That's not what I meant to do. 10160, a bit higher there. So that makes perfect sense, right? That is the daily level. You know, you can argue that the daily levels here, that would be my daily level, but you know, what's 69 pips between friends? And I think with these, you know, with these levels, if they're not 100% crystal clear, as this one isn't, and all daily support and resistance is, guys, and if you don't know and you don't have them on your charts or you want to check them, it's really, really simple to do. And it's an exercise that I think was one of the earlier skills I picked up. And I think the daily levels came from my charts originally because I was doing it 15 years ago. And what I learned was when you've got an area of both support and resistance, that's the strongest level that you can put on your chart. So you don't just use, what have I got here? 1 year, not even 9 months. You don't use 9 months of data. You go back and back and back. So you've got that line on your chart. How often has this been? Hang on, you can get rid of that. How often has this been support and resistance? And, you know, some people will say, oh, it doesn't matter what happened 20 years ago. It doesn't mean a thing. And sometimes it doesn't. That chart's not giving me anything that I wanted to see. But you could pick a level. Let's pick one here that's been support and resistance. You'll find that the ones that are most obvious are the ones that historically will have great touches. Here, 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 here. So let's investigate that one. You can see through here, you can see through here, where it's been support, it's been resistance over here. It's been support and resistance here. It's been resistance here. And I've gone back to 2012. So you know, you can't tell me that these levels are not remembered because oftentimes they're tested to the pip at these levels. So that's why I would recommend that you go through that exercise. If you don't have those support levels on your chart, weekly is the same, but probably not relevant to you. If you're not trading day charts or end of day charts, probably not relevant. But Sweet, doesn't that look to you like a big false break? It does to me on the daily chart. But you know, intrinsically, for me, the Canadian dollar has got far more going for it than does the yen. And we've seen that since what, 2020, where we're there. Since then, we've gone from what, 74 up to 111. So that's just 50% increase. Wow. That's amazing. Absolutely amazing. And that makes it all the more difficult. All the more difficult because it's overbought. And you've got to take that into consideration. That's why we've seen a pullback. Now, I go straight back to the dollar index, which we were going to talk about, right? Straight back to the dollar index. And the dollar index is just the most amazing chart of all time. Look at that. That's the weekly chart. So from April of 2021 to current, this one's gone from 89 to 115. What's that? 25%? Not quite. 22% or something like that. Amazing. Absolutely amazing. And in the context of how high can it go, well, I'm suggesting that this level here has got to put an absolute set of air brakes on it. It's got to slow down. So 119 becomes, what did I say? 89 to 119. That's 30 out of 90, so 33% increase in the dollar, the US dollar. My God, that's amazing. So to go back to the parity question, Paul, I think this is where you need to be focused. And let's say that's another 500, 109. Well, that's 190. So you look at the 33% from here, it's another $6 in a rally of, what did I say? 30. 6 in a row, yeah, 36 in a row, yeah. So 20%. It's got another 20% to go. Wow. On top of what it's done now. 20% on pound US dollar takes that where? From there to there. 33.84, so let's say 34 out of 143 is about a little bit more than 25%. So this one's got another 10-15% to go as well. 10 to 15% of that is going to be $34, $32, is another, let's say 40. Where are we here? That only takes us to here, where we've already been, 103. So I don't see it going to parity. But that's just me. Let me see if I can get a measured move or something onto that as well. So there's the breakout. Let's get rid of all these lines, shall we? Right, from there to there suggests that we're going to, wow, parity. Okay, that's a different kettle of fish. Below parity. That's interesting, Paul. Okay, so even if I use that entire range, which I probably pretty much just did, that's where we're going. Wow. Okay. So it makes sense there's more in it. I totally get that, but I really didn't see that one coming. Right down to here. There you go, mate. That's my best analysis of pound versus the US dollar. Yes, it's got further to go, but parity looks very much under threat. Great question. Great question. Have we got all the questions? Euro dollar. Oh, sorry, that was your question. 4p. CAD yen we've done. Pound US dollar we've done.
Well, I'm in with you, mate.
Here he is.
Hey, mate,
Where's your late note, mate?
Oh, God. What is happening to all these passwords?
Well, you know now, well, you probably haven't read it. There's a thing called LastPass.
Okay.
That we've now got to register with, and all of our hidden secrets throughout the world are now locked away in LastPass.
Okay. All right. LastPass it is. I'll see if I can get on that later. Well,
you've been trying Euro Aussie as well, have you, mate? I bleed for you. Not as much as I bleed for myself, but I bleed for you. You've got to wait now till it gets back underneath there and retest that level now, if you want to get short. But at the moment, yeah, it's untradeable short for me. Sorry, mate.
Well, do you know what? There's a possible trade on the FTSE, and it's a difficult one in a lot of ways. But let me just show you what we had and what we got going on here, because quite an interesting period right now, because we got the close of the month, close of the quarter, and close of the week all coming up at the same time. So there might well be some interesting moves to come here. But let me just share this on the FTSE. So obviously, I've got Swee's line on here now on the weekly chart. I really like it. So yesterday we had this really strong buying bar to the upside, and it looked like we might well get some follow through off the back of that. But straight away this morning we just tanked the downside. I'm just going to draw this line in here because this is the important one, just along there. Now you can see sort of the relevance of this line when we bring up the daily chart here. It might even be a shade higher. It might be right on top of that. It's probably maybe just a little bit higher here. So I was looking for a retracement to this area to see if we could actually sort of take a long from there. But now we're down here. The market is looking in a lot of trouble. The only reason that there's a tiny little 15-minute level here that it looks like it's attempting to hold at this current stage, and it might well start to move to the upside. We'll see, but the only reason that I would suggest that it could is because of yesterday's movement, and we saw really the bank of it. It was a strange one yesterday because everything started to rally. You know, I was in a trade long on the Nasdaq for a period yesterday, and everything started to rally. But it was all off the back of the Bank of England, which is quite unusual to have our central bank move the market. But it did move the market, and the reason was because they, some speculation might be coming in that there's a possible route where you could raise interest rates, but at the same time buying bonds on the long end. So, and you talk about parity. I've got to be honest, mate. I can't see how it doesn't go to parity. Because if they are the only ones that do this, that we've got a situation where the Bank of England are raising rates slower than everybody else, and then they're talking about buying bonds on the long end. I mean, it's just a bit of quantitative easing over here and a bit of quantitative tightening at a slower rate than everybody else over here. That does suggest that the pound's got further to come down. And the only thing I think holding it up right now is potential speculation that the Bank of England will probably have to front load it and maybe even raise by 1% in the next meeting. But there's a long time till the next meeting, unless they sort of have some sort of emergency announcement. We've got some time to wait here. So I think there's every chance that the pound goes to parity against the dollar. I think more interestingly
just on the back of Paul P's question, my initial thought process when I looked at the US dollar index was, okay, we've got a little bit to go, but I didn't think it would take us to parity. But then if you do a measured move on the range that's just been broken, it's going below parity. It's going to 98.
Yeah. Well, this is it. I've been watching you on YouTube actually, mate, just to kind of stay abreast with the conversation. Just as I was waiting for the link, I was just I thought I'd step in anyway. But yeah, I totally agree, mate. I mean, just making sure that you're doing a good job and not swearing and Yeah, so I think there's a chance that can happen, and you can see. Look at the result of the FTSE. I mean, we're talking about 15-minute charts here, so we haven't even closed the first hour, and the FTSE is already down over 1%. You know, within an hour, which is huge. You know, it's a massive move. Bond yields yesterday in the US also took a tanking. They took a bit of a spanking from over 4% to under 4%. So around about 4.1, I think it was, to around about 3.8. So a big move down on the bond yields, which also started to push the index higher. And because of that, I think the Nasdaq is quite an interesting one to look out for. This is the area that the Nasdaq is currently defending. If we look at this on a short-term time frame, the bulls are trying to defend this point here, and the hour's not done yet, so we'll have to see what happens. But there is a suggestion that if the Nasdaq can get up here in the next 7 minutes, which, considering the moves that we've had already today, could well happen. I mean, that'll be around about I don't know, maybe a 0.75% move back to the upside in the last 7 minutes, which, as I say, could well happen. And if it does defend this area along with the daily pivot, then we could see the Nasdaq also starting to rally. Squeeze level or squeeze numbers on this puts the Nasdaq right on top of the 200 weekly moving average, and it puts it right on top of the 50 monthly moving average. So we've seen how these levels do react in the past. Can it hold this point? Difficult to say, but there's definitely going to be a battle here. Now the big question really as to whether we win for a period on the Nasdaq is whether the announcement from the Bank of England is enough of a catalyst to get us going again, because so far we've seen nothing which has cheered the market up. Now, of course, if this does fail at this point, then we are looking in completely the opposite direction. And correct me if I'm wrong, mate, but if you were to see something like this happen,
well, I know what you're going to say or do,
then I would suspect you are going to be quite interested under here.
You bet.
Yeah. So the Nasdaq looks like another interesting one. You know, so we'll see what happens. I mean, that's likely. You know, that is likely that we test the daily pivot at some point. Now, of course, if it closes above, all bets are off, and the chart's too filthy and too difficult to trade. But if it stops up there, then this position is going to look really interesting. Now that is on an hourly chart currently, so you won't want to pick your poison as to what time frame you want to trade it on. But the hourly makes the most sense because we are really looking hour over hour after the first hour of the UK Open. So market's in trouble if the FTSE does fail to bounce here. You know, as I say, that the Nasdaq and the FTSE both interesting here. If the FTSE fails to bounce here, look at what's underneath. We come down here on the weekly. We could be looking down here for the next potential level of support. Now that is another 2%, another 2% move to the downside before we hit the next level of potential support. And then there are levels below it which do become really interesting. You know, and another one down here. Another one down here. You know, how far is this thing coming down? The reason that the Bank of England decided to buy on the long end is to calm things down. But they're the only ones doing it, and it did work for a day. But look at it now. I mean, this doesn't help the Aussie. We you know, the Aussie's been in all sorts of trouble. Doesn't help the Aussie. Could help the Swissy. Could help the yen. The dollar's kind of in between. It's kind of riding its own path right now. Doesn't help the pound, and when you're kind of looking at potential currencies to kind of trade right now, then the pound has surely still got to be in the basket of the sell, right on the top of the sell list.
Yeah, it looks to be under extreme pressure. Let me put it that way. And is there a sign that it's got potential? We've had a 1 bar reversal, and that's not good enough.
Yeah. Sweet saying watch the data tonight, but actually tomorrow is really interesting because we got PCE data tomorrow. So far this morning, we've had Spanish CPI sinking really from 10.5% down to 9%, very high still, but at least it's down below double-digit figures now. So we've got a few central bankers out as well later today, but it's tomorrow really. We've got PCE numbers from the United States. I suspect if the PCE number comes and shows that there is some weakening in inflation, the market may well settle down for a period. October is incredibly bullish. It's a very, very bullish period for stocks. Doesn't look likely this year. In fact, I would say it's nigh on impossible to get a turnaround and a bullish run towards the October, sort of into the end of the year, at the current climate. So the war in Ukraine, we had Nord Stream 1 and Nord Stream 2 closed down yesterday because of sabotage. We've got obviously all the problems with inflation. We've got central bankers really trying to chase their tail. I mean, we said this last year that they are late to the party on this as they discuss whether it was transitory or not. This is the result of them being so late to the party. So it appears to me that the market has still got another leg to come down. And even though we are on very strong support, this support gives way, then there's quite a bit, I think, quite a bit lower to come. On the NASDAQ, it could well be right down to COVID levels, mate. When I'm looking at this is the COVID-19 high, there's the COVID-19 low. And that on the NASDAQ is, again, another 10% lower. Actually, more than 10% lower.
I'm liking the 4-hour chart, I must say. It's exactly the same setup as the 1 hour and looks really nice.
On the NASDAQ.
Mm-hmm.
Yeah. And I would definitely edge on that side as well, mate. If I was
it's a horrible place to try and trade it though. I mean, you just mentioned that strong support level. You know, if you look at the weekly chart, it's not in a buy, it's not in a sell zone.
No, it's not. No, it's not in a sell zone. Actually, you know what? This 4 hour does look interesting because a little bit lower would give us an inverted head and shoulders, but the potential as well. While it goes along these highs on the trend line. You know, if it creates these highs off the trend line, may well create an inverted head and shoulders down here. So I quite like the NASDAQ. I mean, the NASDAQ's the one. But then, if you
then you look at the daily, and you've got a head and shoulders.
This thing sort of coming here.
Yep.
You're absolutely right. I think that the one saving grace with this is that we are on the neckline.
Absolutely. So, and that's the crucial part.
Yeah. So, you know, the NASDAQ, look at the buy yesterday. The NASDAQ had some decent buying. Let's have a quick look at the volume. I mean, it's not extreme. Actually, last 90 days, we really want here. Let's just double check this of the last 90 days. So we're talking about here, about this point here, of the last 90 days.
You've got to expect a certain amount of buying there because it is at that support level. You just got
to. You know what,
mate?
That is an extreme level. If you look at the last 90 days on the volume, then this is the highest volume of the last 90 days.
Okay.
So that does suggest that the NASDAQ is going to pop higher, you know, and this is difficult, isn't it? Because, you know, a lot of the what's going on out there make it very difficult to like the NASDAQ. But it's not a major problem because if we see a bar like this on a spike in volume, that suggests that we should go long. It's not a big issue as long as you put the correct protection in place. You know, if this is a definite example where the stop loss or the hedge has to come in early. You know, you will not want this to breathe. You just want to kind of get your trade on and see if you pick the right spot. Because if there's a move to the upside, the chances are it's probably going to be quite a big move. It'll probably be a good 5%er if it manages to run to the upside. So so you don't need to worry if you don't get the first time or second time. You know, as long as you're in by the third, you should be okay. So that means putting the stops in the correct place. And the obvious place right now is under this bar. You know, this is the volume bar. It looks like actually maybe under this point might be slightly better, but yeah, it's starting to get a bit tricky. But you know, somewhere in this area, you've probably got a zone. You got a stop loss zone, but you definitely want to get those stop losses on. I would not leave this one to breathe, as I say, because a pop looks likely. SWE's moving averages on the weekly and monthly also suggest that we've got that level of support. We've got a spike in volume on the buying bar yesterday. We have a potential catalyst from the Bank of England. I think there are some speeches today which could move it, and we've got PCE data out tomorrow. PCE data may put people into the market on a speculative level before the number's released. Then if the number comes out and it's positive, you could really see the NASDAQ start to move.
We'll see. I want to see more information, as you're suggesting, before I thought about buying it. But it's in a buy zone. There's no question, in my opinion, anyway.
Yeah. First port of call, though, right?
Yeah, I think I'd use the trend line.
Yeah, I'll be with you. This one of the 4 hours. See, mine's coming down. That suggests. Oh no, we're right on top of it. Yeah, 4 hour. You're right. Not sure what I was looking at a minute ago. Yeah, you're absolutely right, mate. The trend line looks good. We are above. We are beneath it now. If you look at the 4 hour, let's just tidy this up. Or are we?
Yeah, it's a bit tricky. I've got a lower trend line as well through two highs, and we are underneath that one. So it's not easy.
I'm going to take a speculation here, mate. I'll take a little speculative trade on that, and I'll fix it up if necessary. Let me just do the same on my other account. And that's really, you know, looking off the back of that's really looking off the back of all the other stuff that we just talked about. You know, the bar, the volume, the trend line. You know, the possible catalyst. All that stuff is kind of making me think that there could be a bounce here. So I'm taking this speculative trade, and the way that I will probably I'll probably manage it is see if it can go, and I'll add to it if it does start to go, and if it also does start to go, then I'll move those stops at break even pretty quickly.
Yeah, all right, but I'll wait and see what happens.
Yeah.
You were talking about silver on Monday. I've had a good look at silver, and I think it's looking very, very sentiment cycle-ish to me. Which
look
means
at how similar that is, mate, to the NASDAQ, or you know what we've just seen with the NASDAQ. Look at that.
Yep.
Oof. But you know, the interesting thing with silver is because it's an industrial metal, it does suggest that if we're going to get growth, this thing will start to move. Now, when you looked at the sentiment cycle, I did see a little bit of that when you were doing that on YouTube. But when you were looking at that, did you come to the conclusion that it was about to go long? Was that the conclusion that you were sort of saying?
Only for a little bit.
Yeah.
I don't think this is the aversion point, but I think it can work its way back up to certainly 1950 or thereabouts, and maybe even 2050 in extension. Then I'd be looking for an aversion point after that. That's what I was seeing anyway. So yes, it can go long here, most definitely for a little bit. Yep.
Yeah, look at that bar as well. Very, very similar. All about the dollar, isn't it? If that dollar sort of like starts to weaken, then we will see all of these assets do well. And as I say, I don't know whether that move that we saw with the dollar. There we go. There's 90 days there, so it's about 4 in.
Well, the dollar looks very much like it's setting up for a false break of that 113 level.
I'll tell you what, there's another high volume bar here, mate, at the lows.
Okay. I mean, you can see it in the bar anyway. It's pretty strong.
It's pretty really strong. But then if you look at this bar, for example, it looks strong, but actually when you look down, not that strong in comparison, you know, to the pre 90 days. But this one actually does. It's the highest of the 90 days. So we did have a lot of buying yesterday on these assets. It's going to be an interesting day, mate. I'll tell you what, it could be an interesting couple of days coming up.
Yeah, look, I don't normally have a look on Friday mornings, but I will tomorrow. Because I agree with you. I think there could be some interesting developments that I would be interested in. And it's been an absolute disinteresting week for me. I mean, I've been very busy outside of trading, that's for sure. Haven't been in front of the charts a lot, but when I was, what's going on? I don't need to be in front of the charts. It was just a whole lot of garbage. Certainly not meeting my eye.
Yeah. Well, that's me anyway, mate. As I say, I've got the trade on the Nasdaq. We'll see how that one works out. I am a bull, but I think that it's speculative, but the level is good, and there are
you've got reasons.
There's bits of information here which suggests that it could actually go. So Swee's a cautious bull as well. She's saying she'd prefer to wait for the weekly bar if it's a pin bar by the end of Friday and look for long next week.
I love it when Swee says she's being patient. I love that. That's really good.
Yeah. You know me, mate. I'm straight.
All right, let's get out of here. I've got things to do before my next session, and Monday. That's what I meant to say. If you're in Australia, it'll be an hour later. Later? Is that right? Yes. Because we're daylight saving kicking in on Sunday. So if you're in Australia, it will be 5 to 6 instead of 5 to 5 p.m. That is. So 17:55 instead of 16:55. Everybody else should be exactly the same. But if you're in Australia, it's bloody late. Right on 1 o'clock time and dinner time as well.
Yeah, that's not great, is it?
It'll change again in a couple of weeks as well when you buggers.
Yeah, we got November the 4th, I think it is, somewhere around about then.
Yep. Month and bit away. All right.
Yeah.
Thanks for being our trading buddies, everyone, and have a wonderful weekend. We will catch up with you on Monday. And Ash, thanks for being there, buddy, mate.
You are more than welcome, buddy. Thanks for holding the fort.
And don't forget for the link, you've got to get into that.
Got it. I'm going to do it right now.
All right. Happy days. Thanks, Tajul. Thank you, everyone.